Hi, Shannon here from the Life Realty team. With me, I have Brendan Connors from EMac Home Mortgage. Good morning, Brendan. Could you start by talking about what EMac does?
Yeah, good morning. EMac is a correspondent lender, which means we originate mortgages and then we sell them to investors on the secondary market. So for purposes of someone applying for a mortgage, it's the same as going through a broker or a bank.
Nice. What is the most common mortgage programs your clients are using today?
I would say the majority of people are using either a conventional mortgage or a government, generally FHA. So for mortgage programs, you're going to have your conventional mortgages. Those are through Fannie Mae and Freddie Mac. There's a certain set of guidelines for those loans, and then there's also government loans. So there's FHA, there's also VA loans for veterans, and there's also rural housing programs for more rural areas. The last class of them would be jumbo loans. Those are for higher value properties where the loan limits don't necessarily fit into the loan limits for a conventional or an FHA mortgage.
All right, I see. Could you tell us about the current interest rates and what the future may bring for them?
Yeah, so ever since the election, there's been some optimism in the financial markets that has led to stock market increases, and in turn, interest rates have also started to go up. The Fed just recently raised the federal funds rate, and mortgage rates have increased a decent amount over the past month or so. I would say they'll probably continue to increase over the next year. It's hard to say for sure, but the federal funds rate going up is one part. Also is going to the Fed's impact on buying mortgages. So the government has been purchasing mortgages over the past X number of years to maintain low interest rates and stimulate housing. They might start to slow that down over the next year or two, so that might also increase rates a little bit. With all that being said, the expectation is that incomes are going to go up, the economy is going to do well in general, so hopefully that means that everybody's in kind of a level playing field as buying a home goes.
Right. What can someone expect going through the mortgage process?
So the mortgage process is certainly more difficult than it was in the past, pre kind of financial collapse. A lot of it is for protection, both for the consumer and for the lenders. That means that there's more documentation to go through. It's a little more of a strenuous process, but generally speaking, you'll start with a pre-approval, which is an initial decision on lending, and it's based off of the information given by whoever's seeking the mortgage. Then through the mortgage process, all of their information will be verified by an underwriter, and that's generally the most strenuous and time-intensive part of it. They're going to ask for a lot of documents, bank statements, tax returns, things like that. So as you progress through and kind of satisfy these, they'll refer to as conditions for approval, you'll get a couple underwriting rounds. The underwriter will look at things, they'll let you know what still is outstanding, any new things that might have come up, and then once all of those are cleared, then your loan is clear to close and you'll go through the closing process and can finalize your purchase.
All right, I see. We would like to know more about what qualifies someone as a first-time home buyer.
Yeah, so from a lending perspective, a first-time home buyer is not analyzed much differently than someone who's purchased a home before. The differences usually lie in their financial situation. Generally, a first-time home buyer is going to have a lower down payment for their home, and that in turn probably leads them more towards probably an FHA loan, though they can also get a conventional loan with 5% down. And I guess the biggest part of that is mortgage insurance. So if you do not have 20% as a down payment on a loan, you're going to have to get mortgage insurance. In FHA, there's a FHA mortgage insurance that they provide themselves. If you go conventional, you'll get that from a third party, or your lender will. You won't have to pursue it separately. And what that means is you're going to have an additional payment on top of your mortgage and your taxes and insurance.
Mm-hmm.
It's not ideal, but it's definitely a benefit in my eyes. Mortgage insurance allows people to buy houses that don't have a larger down payment. And with the conventional loans, your mortgage insurance will go away after you've reached 22% equity in your home. With an FHA, there are some other guidelines, but that's kind of one of the biggest things to be aware of. And I think my biggest piece of advice to first-time home buyers with mortgage insurance is sometimes it's not, it's definitely nice to get 20% down on a mortgage. You don't have to pay it, that's ideal, but don't let that dissuade you from purchasing a home, because every mortgage payment that you make, you're gaining equity in your house.
Mm-hmm.
So depending on your rental market, purchasing even with mortgage insurance is often probably your best financial move in the long run.
All right. What do you like most about working with EMac?
EMac's a great company. The number one thing is I think they really care about their customers and getting them into their homes and getting their mortgages approved. Throughout every level of management, underwriters, processors, they really do care, and they really work with people to try to get things done.
Nice. Thank you for your time. How can people contact you if they'd like to reach EMac?
Yeah, so my cell phone's the best number to reach me. My number is 617-462-1125, or you can also email me at bconnors, CONNORS, at Annie, ANNIE, -mac.com.
Nice. Happy holidays. Thank you.
Same to you, thanks.